Welcome back to Rekt Radio, the one place where we look at a flat market and see a launchpad being built brick by boring brick. I'm Sunny, and I believe the silence is the sound of rocket fuel being loaded.
And I'm Cole, here to tell you that's not rocket fuel. It's the sound of the market taking a nap. Let's not wake it up just yet because it might be cranky. The big news this week is less of a bang and more of a prolonged, awkward silence.
You're talking about the Fed, aren't you? They decided to leave interest rates exactly where they are. No cut, no hike, just steady. And look what happened to Bitcoin. It held steady. It didn't flinch. That's strength, Cole. The market stared down the most powerful financial institution in the world and yawned.
It didn't yawn, Sonny. It's in a holding pattern, just like the Fed. The market is waiting for a real signal, and it didn't get one. Holding steady in the face of inaction isn't a sign of strength, it's a sign of total uncertainty. Nobody knows which way to jump, so nobody is jumping at all. This isn't strength, it's paralysis. What this really means is that Bitcoin is still completely at the mercy of macroeconomic policy. It's a puppet, and Jerome Powell is holding the strings.
But he didn't pull the strings. That's the point. For years, every little whisper from the Fed sent crypto into a tailspin or a parabolic rally. The fact that the market can now absorb this kind of major economic news without panicking shows a new level of maturity. It's weaning itself off the Fed's every word. It's building its own fundamental case, independent of what the central bankers are doing.
That's an incredibly optimistic take on what is essentially a flatline. The market isn't mature, it's just waiting for the next meeting, and the one after that. The hope for a rate cut is the only thing propping up these prices. The moment the Fed signals that rates might stay higher for longer than expected, this whole house of cards will come tumbling down. This stability is just the market holding its breath.
Well, while it's holding its breath, let's look at what the charts are telling us, because they tell a story that goes far beyond one Fed meeting. I have the technicals from TradingView pulled up, and it's painting a fascinating picture.
Please enlighten me. What tea leaves are you reading in the charts today?
It's all about the time frames, Cole. If you look at the one-day chart, the summary is a big fat neutral. The oscillators, which measure momentum, are neutral. The moving averages, which track the trend, are neutral. It's a perfect picture of the paralysis you were just talking about.
So you agree with me? The market is dead in the water. No momentum, no trend, nothing. It's a technical ghost town. Thanks for proving my point. That's a terrifying place to be, because a market that can't go up is just one bad news event away from going down very, very fast.
Let me finish. That's just the daily view, the short-term noise. That's the weather. I'm interested in the climate. When you zoom out to the one-week chart, the summary flips to a clear buy. And if you go out even further to the monthly chart, it's a strong buy.
Oh, here we go again with the lagging indicators. Sonny, that's like saying your vacation is going great because the weather was beautiful a month ago, even though you're currently in the middle of a hurricane. The monthly chart reflects the sentiment from weeks ago. The daily chart tells you what's happening now. And what's happening now is nothing. The engine has stalled. The buyers who created that strong buy trend are exhausted.
It's not a stall, it's a pit stop. This is the most bullish setup you can ask for. It shows that the powerful long-term uptrend is still completely intact, and the market is simply consolidating its gains. It's building a solid base of support at these price levels before launching its next major leg up. This neutral daily chart isn't a sign of weakness, it's a sign of immense strength being gathered. It's a coiled spring. The market is absorbing all the sellers here, letting the weak hands fold before the true believers push it higher.
It's a bull trap, and that strong buy on the monthly chart is the bait. It lures in the optimists who see the old trend and think it's guaranteed to continue. But the real-time picture, the daily chart, is screaming that there's no more fuel in the tank. When there's a divergence this big between the long-term trend and the current momentum, it's often a warning sign that the trend is about to reverse and reverse hard. That neutral reading isn't a floor, Sonny. It's a ledge.
I see a launchpad, not a ledge. This is the definition of a healthy bull market pause. It establishes a higher low, confirms the conviction of long-term holders, and prepares the ground for a sustainable move to new all-time highs. You can't just have vertical green candles forever. This is where the real strength is proven.
And this is where the smart money distributes its bags to the hopefuls who are staring at last month's charts. This pause is where the risk is highest because the crowd is still bullish, but the actual buying power has vanished. It's the calm before a storm, I'll give you that, but I see a lot more red clouds than you do.
That's all the time we have for this episode. I say the long-term trend is our friend, and it's telling us to stay the course. The market has weathered the Fed and is building energy for its next flight. Stay bullish.
And I say don't get tricked by the rearview mirror. Keep your eyes on the road ahead, and right now, it's foggy with a high chance of a cliff. Be careful out there. You've been listening to Rekt Radio.